all of you. Our today's topic is Introduction of Private, Public and Foreign Banks. Private sector banks in India are commercial banks owned, managed and controlled by private individuals or corporation. These banks operates with the primary objectives of earning profit while offering competitive, efficient and customer-friendly banking services. These banks are generally owned by the private individuals or private sector. Key features of private sector banks are number first, private ownership. Majority of the shares are held by the private entities or individual and not by the government. Private sector banks are generally technological driven, known for innovation, use of modern technology and digitalized service, for example, internet or mobile banking. These banks provide the customer-centric approach. The emphasis on fast service, convenience and customer satisfaction is the major goals of private sector bank. They are efficient in operation, learner management structure leading to quicker decision making and support the customer for the particular needs. They focused on urban areas. Generally, many private banks started with a strong urban presence but are now expanding to rural areas. Now we can classify the private sector banks into different types. Number first is the old private sector bank. These were in existence before the nationalization of banking sector in India, that is before 1969. More regionally focused and conservative in operations. For example, the Karur Vyas Bank, which is in southern India, City Union Bank in Tamil Nadu, Mercantile Bank, are the example of the old private sector bank. Now, the new private sector banks emerged after 1991. They follow liberalization of the Indian economy. They are more technological oriented, aggressive and they have the pan-India in operations. The example of new private sector bank are well known HDFC Bank. It is the India largest private sector bank. ICICI Bank, Axis Bank, these are the example of the private sector bank. One more is the Kotak Mahindra Bank, IndusLand Bank, Yes Bank. They are the well-known bank in the private sector area. Major private banks and their establishment. India major private sector banks are the banks established primarily with the era of 1990 and early 2000. They have significantly shaped the nation financial landscape. The example is the well-known HDFC Bank and ICICI Bank. Both banks were founded in 1994. They are stand out for their digital infrastructure and global presence respectively. Axis Bank launched in 1993, which offered a strong mix of corporate and retail service. Kotak Mahindra Bank transitioned from an NBFC to a full-fledged bank in 2003, while IndusLand Bank, also founded in 1994, which maintained a solid position in both retail and corporate banking. The well-known Yes Bank, established in 2004, has undergone reconstruction by the Reserve Bank of India and following financial difficulties, making a notable turnaround in Indian banking sector. The Indian banking sector has following financial outcomes and they are play a major role in the economic development of India. Now, the function of private sector bank. The private sector banks perform different functions include accepting deposits, saving accounts, current account, fixed deposit, providing loans and advance, personal loans, home loan, education loan, business loan, etc. Investment and wealth management services. It provides mutual fund, insurance, portfolio management and digital marketing, internet banking, mobile banking, UPI, virtual debit cards, credit and debit card services, foreign exchange and remittance, corporate banking and SME finance. It plays a role in Indian economic development. It provides boost in the financial inclusions and digital literacy, providing employment and financial innovation. It supports economic growth by financing industries, startup and SME. Public sector bank in India. The detailed explanation of the public sector bank are the commercial bank in which the majority stake more than 50% is held by the government of India. These banks operate under the guidance and regulation of the RBI, that is Reserve Bank of India, and play a vital role in Indian economic development and financial inclusions. Key features of public sector banks are the government ownership. The Indian government owns more than 50% of the share and has major control over the management. They are having nationwide presence, extensive network or branches, especially in rural and semi-urban area. Provide social welfare, aims to focus on the social welfare of the public, including unprivileged section of the society. The support in the financial inclusion leads efforts to provide banking access to unbanked population, backed by the sovereign guarantee, considered safer due to implicit government support. Function of public sector banks includes accept deposit, saving account, current account, fixed deposit, recurrent deposit, lend money to the customer, personal loan, home loans, agriculture loan, MSME, financing corporate loan, and support government schemes like Pradhan Mantri Jan Dhan Yojana, PMJDY, Mudra Loan, Kisan Credit Card, PM Awas Yojana, Housing Loan. They provide basic banking services including ATM, debit card, credit card, mobile, internet banking, improving in recent year. Acts as government agent, disburse subsidies, pensions and direct benefit transfer to the customer. Role of public sector bank in the economic development of India. The financial inclusion largest role in bringing banking services to the rural and semi-urban area. Economic stability. Provide stability during economic crisis. Government support ensure continuity. Credit support to priority sectors like agriculture, MSME, education and housing development, banking, funds, infrastructure, irrigation, rural development. The regulation and governance of the public sector banks are by the RBI, audited and supervised by CAG, that is Controller and Auditor General of India, and controlled by the Ministry of Finance, known as the Government of India. There are certain challenges faced by the public sector banks, including NPA. NPA stand for non-performing asset, high level of bad loans, especially in corporate lending, operational efficiency, bureaucratic procedures, and slower decision making. The technological lag are the major drawbacks in the public sector banking system. There are certain other problems like capital adequacy, often require government recapitalization to meet capital norms. Recent reforms and development bank mergers to create stronger and more efficient entities. Capital infusion by the government to improve financial health of the public sector bank. Digitalization efforts like YONO by the SBI, mobile app by other private bank. Privatization proposal, government plans to privatize selected PSB to improve their efficiency. Next, we will going to explain about the foreign banks. Foreign banks are those banks that are incorporated outside India but operate their branches or subsidiaries within India. They provide banking and financial services to Indian clients under the supervision of the RBI. Key features of foreign banks include headquarter overseas. Their parent company is located in another country, operates via branches or wholly owned subsidiaries. Their RBI allowed foreign banks to either set up branches, most commonly, register as wholly owned subsidiary for better local control and expansion. They focus on high-ending banking, primarily cater to multinational corporation, high net worth individuals. They provides the trade finance, foreign exchange and investment banking services. They have the limited branch network, mostly located in metro cities and major business hub due to high compliance and operational cost. Advance in technology and practices known for modern banking practices, global system and strong risk management are the best feature of the foreign banks. Function and services provided the foreign banks include corporate banking, business loan, working capital, project finance, trade finance, letter of credit, bill of exchange, international payment solution. The foreign exchange services, currency trading, forex advisory, remittance services are and retail banking, credit cards, saving accounts offered by some like DBS and Standard Chartered Banking, investment banking, mergers and acquisition, underwriting, private equity advisor. The support in wealth and asset management, portfolio management, mutual fund, a structured product, advantages of foreign banks in India. The global expertise bring international banking standard and innovation. They are specialized in providing the service, strong in foreign exchange, trade, finance and MNC support. They are efficient customer service management known for quality service and speed. High compliance standard, strong regulatory and risk management framework regulated and guided by the RBI. Foreign banks in India must follow Banking Regulation Act 1949. RBI norms on capital adequacy, priority sector lending and local incorporation. Basel norms for global banking regulation compliance. RBI encourage foreign banks to convert into wholly owned subsidiaries for better oversight, expansion flexibility, equal treatment with Indian banks. There are certain recent trends including DBS Bank, Indian became the first foreign bank to operate as a wholly owned subsidiary. Citibank in India retail operation were acquired by Axis Bank in 2023. Foreign banks are partnering and Indian fintech companies for digital growth. In conclusion, the Indian banking system is a diverse and dynamic sector that play an important role in country economic growth and financial stability. It consists of various types of banks such as serving distinct segment of society and business. Thank you so much for joining me today. I hope this lecture gave you a strong foundational understanding of public, private and foreign bank, its history, objective and its function. In our next video lecture, we will explore in detail about the development banks, NABARD, SIDBI and their impact on the economic development of India. Until then, stay curious and keep exploring the interesting world of finance. Thank you.